What's going on, guys? New strategy trading right back at you with another live video. Before we get started today, guys, let's get a like, share, subscribe, and a thumbs up. We're streaming from Facebook and YouTube at the same time. And it's been a while since I did a video, but I'm doing this video to give you guys the current updates on the market analysis. On the current status of the stock market, equity market, and the crypto markets as well, Bitcoin in particular, because we had some interesting action over the last week that actually has convinced me to switch my positions. For everybody that has been tuned in to my last video, I was bullish. I was under the impression that the market down cycle, which we profited from a lot. New strategy trading profited a lot from the first quarter drop of the stock market. And we were under the impression that a reversal had taken place and the downtrend was over and that we would reverse to the higher side. And we were wrong. So we're going to discuss two trades in particular, a FORD and a ROBINHOOD, which was my two biggest losing trades so far. I actually was down, in my Webull account alone, my personal Webull account alone, I was down over $2,000 from the FORD and ROBINHOOD trades. And I actually was able to recoup Thursday, because the market was closed yesterday, Good Friday. But I was actually able to recoup about 1,200 of that loss and plan on recouping the rest of that loss throughout the next week or two. I honestly, at New Strategy Trading, we don't lose a lot. When we do lose, it's usually small losses. But sometimes you can let your losses get a little too far, right? Which you should never do, but it happens. It's human nature. As humans, the nature of the stock market and the nature of the crypto markets in general is simply a reflection of human nature. So at times you will slip and break your own rules. And that's what happened. Like I say, at one point in time, I actually might have the screenshot. I think I screenshotted it. And, we're down and we're working on recouping those losses. It's a part of the game. Like I say, when in particular, my personal account, I have several, but altogether, I had built mine to around over about $12,000, a little over $12,000. Sorry, the dog started barking. Hold on, guys. So anyway, when you're working with account, $12,000, over $10,000, stuff like that, a $2,000, being down $2,000 with a $12,000 account ain't too bad. It's not ideal, but it's not too bad. But we're going to discuss that. All right, let me go ahead and share my screen and let's get into these charts real quick. All right, and actually let me move real quick so I can finish so these dogs don't start barking. All right, so this is the FORD chart. This is the daily FORD chart, right? Matter of fact, I'll zoom out here shortly. Let me zoom out and show this. Let me zoom out. All right, so Here's the Ford daily chart, right? This was the play. I was actually in Ford. I can't remember the first entry, but it was somewhere around here, or maybe around here. It was the first small entry, right? Took a small entry. This is a daily chart. Each bar represents a day. But this day here was a very important day because I assumed that to be a breakout, right? Right there. That huge green bar right there, I assumed to be a breakout because it cleared here, cleared that low. It gave you the boom, 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 the ABC, uptrend, pullback, tight, boom, the breakout, right? That's when we started making the first entries or the second entries. Now, I assumed that because this Ford was pulling back or it was dropping into a rising 200. Let me blow this chart up. There we go. So you can see the rising 200 moving average, the purple line. Now, usually when a stock falls into a rising moving average, it'll shoot up. It started to bounce here. So I'm looking at, okay, it's sitting at the rising 200. It's sitting at the support. And then I got this big green bar. Oh, I'm going all in. I'm expecting it to break that 50 and go to the upside, and it didn't. Right? It didn't. And instead of me placing my stop here, which still is a big risk, this is a big bar. So any way that you go, right? If you look at this Ford trade, if you play in this bar, your risk is that bar. So this bar's low is at 17 and the high is at 17.76. You're risking 76 cents. If you bought up here around the high, your risk is here. Your stop loss is here. So even with, let's say with 10 contracts of Ford and it drops 76 cents, let's say 80 cents, that's $400 you lost right there. You could probably get 10 contracts of Ford for about $1,000, less than $1,000 maybe. And if you take a 80-cent loss with a 0.5 delta, that's in between $350 to $400 loss, easy loss, just off that bar. So it's a big risk play anyway. Then once it broke it, I assumed it will find support here at the 20 period moving average because of these bottoming tails or what they call the hammer patterns. This bullish. Plus it was already in the uptrend, a minor uptrend. Boom. When it broke it here, this day here, it was over. The foreplay was over. We had to exit all moves. That was it. There was nothing we could do. Then it continued to drop for 2 more days, rallied back, and it's probably going to continue to drop. So that was a high-risk play anyway. That was a high-risk play because of that. That was a big bar. Now, typically on a stock like Ford, it's not very volatile. So typically, if I'm entering into Ford, I want a very tight stop. So like for instance, if I was playing this support level here at 1550, I wouldn't probably have given it no more than about 10 or 15 cents stop loss. You know, I would have minimized my loss to about $100 on that. Okay. So that was the Ford. The Robinhood was even worse because, man, Robinhood's pattern was just amazing. Let me blow it up. This is the daily on Robinhood. I mean, this is a picture perfect breakout market structure low right here. Boom! Killed that. I mean, you've seen it bottoming here. We've seen that. Popped up here, did a beautiful pullback on the rising 20 that has started rising. So you get big green bars, pull back into that, support at the 20. Boom! Huge green bar. Big breakout. And it broke the old high. But it didn't follow through. Like I say, if you do the same thing we did before, place our stop loss at the bottom of that bar, It violated it. It should have never really violated the bottom of this bar, and it shouldn't have violated the 20. So when it did it here and broke back below the 50, that was really your exit right there for Robinhood. That was it. That was it. It broke. It shouldn't have broke that. Then it continued to drop. Boom, boom, boom. Now it's going to come back down to this low here. Let me extend this. It's going to come back down to this low. All right. Now, and the main reason these were losing trades was not because of that was a bad move, because that's a market structure low. That's a pattern. Up, high, test the low, boom, broke the new high. But because of the big bar, it's a lot of risk. $13 to $16, that's a $3 bar. So that's a $3 risk. With a lot of contracts, that's a big loss if it goes the wrong way. So I should have put tighter stops. I should have probably reduced my stop to half of this bar. So that way, at this second day, I would have been out. And probably would have reversed my position after it broke here. Boom, shorted and then re-shorted like I did here. But another main reason, though, is if you go to the markets, if you go to the NASDAQ, right, which is all your technology sector, right? Here's what's even more trickier and why I was bullish about the market, right? The market did a follow-through day, a failed follow-through day here. A follow-through day is when the stock or stock market rises in 1.5% or more in volume higher than the day before, right? I'll say that again. It's when after a downtrend, the stock market rises 1.5% or to 2% or more in volume higher than the day before after a downtrend. So the market bottom, boom. This was the bottom. This is the crash when it first started topping out. It dropped big. Boom. All right. Found a little support, did a double bottom. This was day one. The first day of the attempted rally. 1, 2, 3, 4, 5, 6. On the sixth day, it gave you a huge green bar, a return of 2% or more on volume higher than the prior day. So that was a follow-through day. That failed. I already knew that was going to fail. We shorted that whole decline. We shorted that rally and made a big, big, big chunk. But this second follow-through, it double bottomed here in support of this big green bar, double bottom. And this day here, boom, broke the high. That was the follow-through day. Then the rally continued, broke the 20, broke the 50. But when it got up to the 200, it did break the high. And this is why I was bullish. It broke the high on the Qs, and it broke the high on the S&P 500. Broke the high on the NASDAQ, which is the Qs, and the S&P 500. So I was bullish. So the pullback, I knew it was going to pull back, but I thought it was going to find support at the rising 20, and it didn't. Boom, it crashed below it. So when it did that, let me go back to the Qs, to the NASDAQ. When it did that, I said, man, obviously it's still finding resistance here at the old highs here from the first failed follow through and from the 200 period moving average. When I saw that, I said, oh, wow. Let me go to my weekly chart to get a longer time frame. And when I went to my weekly chart, guys, this is what I just realized was going on and why that rally failed. I want y'all to look at this. This is serious right here. Now, my traders know what pattern this is. My traders that's been with me for a while, that's up to the kind of advanced levels. They know what this is right here. This is a weekly chart. Each one of these bars don't represent a day; they represent a week. So this is going back long term. We can go back all the way down here to 2013, 2014. And we see that the stock market has been rising exponentially since the last recession when was it, 2009, whatever, 10, when we came out. So it's extended. But this here, this pattern, let me show y'all what this is. Right here. Shoulder. Head and shoulder. This is, guys, y'all have heard me talk about this pattern so many times. This is a classic head and shoulders pattern. Shoulder, head, boom, shoulder. Now, we already called this pattern. Now, if you go back to the videos, we already called the first head and shoulder where this was the first shoulder right here. Shoulder, head, shoulder, top and tails off the 50 into the red, crashed. Bounced, double bottomed off support, big green bar, which we thought was going to start the new bull market. Came up, did the same thing, more top and tail, but this time it's met by a falling 20 and a 50. Gave you a shooting star right here, followed by a big green bar, and look at what it did this week. The completion of this pattern is at the 317 level. Once it breaks this pattern, it's going back down here to 297, 300 area. I'm foreseeing this to break new lows. This market is in trouble, guys. This is a weekly chart. This represents long term. It could easily go down here and test the 200 period moving average at the 260 level. Easily. Matter of fact, that's really the next target. If you're using the moving averages, you got the death cross, the 20 cross below the 50. You got the head and shoulders. I mean, this thing is coming down. It's coming down more. S&P, same thing. Head and shoulders. Head and shoulders. Falling 20. Shooting star. Top and tails at the resistance. Boom. Now it's crashing back below the 50. And the Dow. Dow, matter of fact, is already in a downtrend now. It's trending downward because now it's making lower highs and lower lows. So I went ahead and connected it here and here. Let me go to the daily and show y'all the daily on the Dow, on the Dow Jones. It's the daily right here. So it's in a downtrend now on the daily since back here, January. High, low, broke that low. So lower low. This high failed to break that high. Lower high. This low broke that low. Lower low. This high failed to break that high. Lower high. It's in a downtrend. Lower high and lower lows. Uptrend is higher high and higher lows. Now, even on this small, I found a small trend. High, low, lower high, lower low, lower high, lower low, lower high. What's coming next? A lower low. It could break this and come down here to the bottom of this channel. It's trending in a downward channel line. Downward trend line. Downward trend line channel. A downward channel is drawn by drawing a line that is parallel to the downtrend line, and this is a new line, is adjusted to the bottom boundary of the price movement. This then forms a channel of the price, and as long as the price stays between these two channels, the bearish market movement will continue down. And here's given an example of gold. Look at that. High, low, lower high, lower low, lower high, lower low, lower high, lower low, and you connect those lower highs and you get your downward channel line. This is basic technical analysis. So now we are back in this downtrend line. And so is Bitcoin. Watch this same head and shoulders pattern that we seen on the stock market, NASDAQ, S&P 500, and look at Bitcoin. Same head and shoulders. Shoulder, boom, head, shoulder. Falling 20, falling 50 death cross. This clear here on Bitcoin here, when it cleared here, this bar, I was bullish. It broke it. I thought it was going to continue up. This pause week was really just a pause week. That wasn't vital. But this last week, boom. Now it's continuing to fall. So what's the next target? This low down here. What's the next target after that? The 200 period moving average. It could go to 20. I didn't think it would, but it could because it's forming a head and shoulders, topping out. And it can, and it's okay for long term. For long term, I'm never bearish on any of this stuff. But you don't want to get in something at 48,000 and then watch it drop to 28,000, and then you have to sit there for another 6 months before you even start making profit. So no, it's not the time to buy Bitcoin now. It's not the time to buy stocks now. It's the time to either short or sit back and be patient, be in cash. If you already got it, if you already profited on it, of course, if you bought back here at 20 and 10 and 12 and all this, you good. But for people that are just not getting introduced to it, it's not a good time to buy in right now. Let's look at Ethereum. Look at that head and shoulders. Just beautiful. Shoulder, head, shoulder, falling 20. Red takes out green. Boom. Once it breaks this neckline at 2,400, it's going back down here. And it needs to. I mean, it's gone from 122 in March 2020 up to freaking almost 5,000. It needs to breathe. It needs to correct for another 6 months. But long term is bullish, but now is not a good time to start your investment if you aren't already in, like we've been in. If you aren't already in, don't get in yet. And if you want more information on when to get in, send me a message, because all my classes are private. I just do these updates now. All right. So that's what it is, guys. It's not looking good. It's not looking good at all. So what we want to do now, we don't really want to buy the stocks now. We want to short the market through options and then prepare to buy in the future as the dip continues. All right. And sometimes you have to go to these longer time frame charts to get a more clear picture. Like I said, the daily was looking bullish, but the weekly was looking bearish. And so that's why we reversed all our positions. We reversed our crypto down to our normal 25% that we would never sell. And we reversed all our longs to shorts. Hey, listen, you have to move with the market. You can't sit on the wrong side and just watch your money go down. When the market moves, you move. And this is how you're able to do. Like I said, my Webull was down over $2,000. At this point, I just recouped yesterday and the day before about 1,200 of that. Next week, we should go into the green. All right. The bear market is here. It is not looking good technically. It's not looking good fundamentally. All the recipes, all the ingredients for recession are here. Inflation at a high, all-time high. All right. Pay attention. Pay attention to the charts and pay attention to the numbers. New Strategy Trading, signing out.